Hey guys, Jeff Bostic from the Bostic team here at Rate, and this week we got some housing data as well as some inflation metrics that we're going to review and just talk about how the market ended up a little bit higher this week from where we had ended last week. So first, we'll jump right into it. Appreciation data came out. There were 150 economists nationwide polled, and the consensus is that nationally we should see appreciation through 2025 on homes of about 3.78%. But the big news is over the next 5 years, those estimates are going to be about 27%. And so I looked at a little bit of a lower sale price, but let's say 350,000, especially for that first-time home buyer, might be on the fence, has a little bit of cold feet about should I jump in the market, should I not jump in the market? And on a $350,000 house, we would see a little over 11,000 appreciation over the next 12 months. But really, the big number is over almost 95,000. That is 95,000 of appreciation over the next 5 years. And so those are real numbers that I think are the numbers we need to be talking about with those first-time home buyers. If they're on the fence, if they're not sure if they should wait because of where interest rates are, wealth is created through home ownership. Let's pass that message along. From there, Corelogic had a survey about total households, and 91 million of those 136 million total households in the country are homeowners, and then who has a mortgage and who doesn't. But that number was over the average homeowner nationwide had over 300,000 equity, and that's, I say average homeowner, that's average homeowner with a mortgage. So that's where that real wealth creation does come into play, and just more of that message to beat in. So moving on from that, we did have inflation metrics this week. And so the two big ones we see are CPI, the consumer price index, and PPI, the producer price index. That's the wholesale reading of things. The headline numbers came in a little hot. The core numbers, which strip out food and energy, they came in right where expected. But where did these gains come from? It came from food prices. And so we saw the two big movers were chicken eggs were up over 55% month over month. And then produce, your fruits and vegetables, those were up 31% month over month. So big numbers on the food side, which is what we saw increase the headline numbers for inflation from October into November. From there, unemployment was up slightly this week. Actually, first-time claims were up to over 242,000. That's the first time we've seen numbers that high since we've been doing these updates over the past few weeks. Continuing claims, that was at 1.89, still below 1.9 million. So we haven't seen that increase as much, or what we saw a few weeks back, so that's still a little bit tampered. But unemployment is something we're keeping a good eye on. Now, rates moved from about 6.68, I think is what we were seeing, 6.62, something like that last week, to now they're just below 7. So it was a slow burn this week. It just rose and rose and rose little by little. So one of the things that it's leading to is Fed week is next week. And so we're gonna see the money is still on. The Fed's going to reduce. They're going to cut rates by 25 basis points. We don't foresee there being any changes or the Fed giving us any surprises. So that's still on the table. That would conclude 1% over the last 3 months of rate cuts, and just a good way to finish the year for that, and encouraging going into 2025. We also have PCE. That's the Fed's favorite reading of inflation. We end the week with that next week. So there are some market movers right before Christmas, and we could see maybe this increase is just short-lived, or it could be something that lasts a little bit longer. So more coming to you next week. Also check below in the email. We're talking about 2-1 buy downs as rates have kind of just stayed steady. I've had more conversations about temporary buy downs with your clients this week. And just another conversation to open another way, especially for those homes that might have been on the market for a week or so, or if we're seeing some price reductions, that could be a great conversation to help your buyers get lower payments to start. So take a look. Let me know any questions. Have a great weekend.